Retiring on dividends rather than relying on portfolio principal has several advantages. Passive income generated through dividends is more predictable and reliable rather than trying to time the market and to know when to buy and sell. The predictability from dividends makes it easier to gauge whether your portfolio will be sufficient enough for you to retire and maybe live off completely or not in the future. Also, retiring off dividends provides investors with peace of mind. And even if a dividend portfolio declines sharply in value, living off the dividends within the portfolio can allow investors to rest assured knowing that the passive income will continue to arrive, supporting your lifestyle indefinitely. Now, the hard part about all this, finding a reliable dividend stock, which can be a daunting task. Not all companies that pay dividends are equally dependable, especially higher yielders that also grow in share price, and also raise their dividends as well. But in this video, we're going to do a deep dive into a stock that offers all of this. Right after you, please drop a like on this video and subscribe for more content like this in the future. Now, high-yielding dividend stocks are very appealing to investors for several reasons, but the most obvious reason being that stocks with a higher starting yield offer investors a significant amount of income right off the bat. With many other stocks and ETFs that have a lower starting dividend yield, it could take years and years for an investor to really start to receive a significant amount of money paid by dividends. But the most important thing to be aware of when investing into higher starting yield dividend stocks or ETFs is to make sure to try and stay away from yield traps. Now, dividend yield traps refer to the investment that may appear to offer a very high dividend, but also comes along with significant risks or the potential for a dividend cut or suspension. These types of dividend investments can be misleading and can trap investors who are primarily focused on chasing higher yields without fully understanding the risks involved. Now, what's great about the stock that we're going to go through in this video is the fact that it does offer a very high starting dividend yield, but in my opinion is the furthest thing away from a yield trap. Now, the high yielding dividend stock that we're going to go through today that not only offers capital appreciation, a long sustained dividend, and dividend growth is Enterprise Products Partners, or ticker symbol EPD. Now, first, a little bit of background on Enterprise Products. EPD is a midstream with a diverse asset base and substantial geographic footprint, giving management numerous investment opportunities in organic growth projects and strategic bolt-on acquisitions. Now, EPD collects a wide range of hydrocarbons from various sources in major producing regions and supply them to an array of end markets. EPD excels in the natural gas liquids business segment and has a robust petrochemicals unit that transforms cost-effective U.S. molecules into valuable exports. And with an anticipated increase in U.S. NGL exports in the coming years, EPD is well positioned to benefit from the growth trend due to its extensive related assets that span the NGL value chain. Now, a little bit about how Enterprise Products generates money. EPD generates very stable cash flows across macroeconomic and energy industry conditions thanks to its long-term fixed-fee commodity price resistant contracts that generates most of the company's EBITDA. Management has also done an exceptional job of running the business in a prudent and conservative manner while generating annual distribution growth for a quarter century. Now, a little bit more about EPD's share price. The stock is up over 423% over the past 20 or so years. Another thing I like about Enterprise Products and why I've been buying so much of it over the past several years is the fact that the stock has a relatively low beta. With EPD having a beta of 0.8%, the stock for the most part doesn't move all that much, which I love as a long-term conservative dividend growth investor. Now, Enterprise Products is offering a 7.6% forward dividend as of last with a 49-cent per share payout on a quarterly basis. Now, what's maybe most impressive in my opinion is the fact that EPD has consistently raised their dividend every few quarters or so for several years now. Now, this is significant to me personally because you don't really see all that many stocks within the market that have a high starting yield, some price appreciation as far as share price, and also some steady, maybe slow, but still steady dividend growth. And of course, because Enterprise Products has had such a fair amount of price appreciation, dividend growth, and consecutive dividends paid over the past various years, it's no secret that EPD most likely has a quite decent total return, which is dividends plus share price included. So year to date, for example, EPD has returned 10.43%, which definitely isn't all that bad. Sure, it's not beating the S&P 500 because the S&P 500 obviously is higher beta and has more growth potential when the market does well, like it has done so far year to date, but EPD offering a 10.43% return so far this year in the last 170 days, in my opinion, is very, very impressive. Over the last year, 365-day time frame, for total return, EPD has returned 17.67%, beating the S&P 500's 16.46%. So once again, a lot of times when you find a higher yielding dividend stock that's offering a starting higher yield, it's very, very tough to find a high quality company that has a total return of that, like something like EPD. Over the last 3 years, for example, 1,095 days, EPD has returned 72.71%, where the S&P has returned 45.23%. Now, don't get me wrong, 45% over the last 3 years is still extremely, extremely good, in my humble opinion, being again more of a income-focused, more conservative, slow and steady dividend investor. But 72.71% is absolutely insane. Now, just to give another quick example, I added in Altria, ticker symbol MO, on the 3-year time frame to compare how it's done next to the S&P 500 and, of course, EPD. Now, not to pick on Altria, but I do think that Altria sort of is in line with EPD. They're both companies that have been around for a very long time. They're both companies that have raised their dividends pretty consistently, and they're both companies that can offer a massive starting yield to newer investors getting into them. But the thing is that if you look at the total return, and this is once again the share price plus dividends included, you can see that Altria, for example, trails the S&P 500 over the 3-year time frame, which then trails EPD by a long shot. So I just make this quick point to definitely tell you guys to all use the charting feature on Seeking Alpha or any other financial website. I don't really care if it's Seeking Alpha or not, and look at the total return on multiple different time frames, especially if you're interested in buying into a higher yielding dividend stock or ETF. Do not fall into a yield trap. Please do not buy into a high yielding ETF or dividend stock just because they have a massive yield. Please look at how they've performed historically. And if they do, of course, cross off all the things that match with your strategy before you start buying into it. So overall, Enterprise Products does seem to have a very sustainable business model, has a strong balance sheet, a good credit rating, offers dividend growth, and some capital appreciation. That being said, for any dividend investors out there that are looking for a higher yielding dividend growth stock, I think that Enterprise Products would definitely be a name to look into. But I want to hear what you guys think down below. Comment down below what you think. Any high yielding dividend stocks with, let's say, a 7% or above dividend yield that you think are also just as strong as far as overall business model, balance sheet, and total return compared to something like EPD. If you enjoyed this video and you want to see more videos like this in the future, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, and I'll see you in the next one.